TGIF, huh? Woke up this morning with no internet because my internet provider decided that Friday mornings would be a really great time to update something. Thank goodness they got it done in time. I guess I'm all for making things better. So if you notice that I hadn't posted everything that I normally post, just give me time after the briefing. I'll get it all posted. The OEC levels and the call and put walls and all that stuff. I'll get it posted after the briefing. All right. We are finally out of this hurry up and wait mode, it seems. Taking a look at what's going on around the world, we are green, risk on. The Dow is up the least amount at 0.25% with the S&P right behind that. Then Japan, and then the Russell with the NASDAQ up almost 0.5%. Beyond that, we've got Europe, and leading the way up the most at 2.75%, China. So for you day traders not focused on the futures, you're probably going to want to take a real close look at the China ADRs of BABA, Baidu, JD, PDD, those groups. Plus that weight loss drug company, Novavax. What a blowout move. And I just got my internet back on, so I haven't even seen it yet. I've just been hearing about it all morning. Last I heard, it was up over 100%. Not seeing it here. Novo Nordisk. Not wide. If that one's up, then the others should also. VKTX and LLY would be another one. And then there's one that starts with an A. I can't remember. AMGN. Yeah, that one. All in that same weight loss group. But NVO didn't look like it was up when I was just sitting here looking at it. So like I said, I just got my internet back. I don't know why it's not up. Maybe I'm getting the symbol off. I don't expect too much out of the monthly U.S. federal budget today at 2 o'clock. It's not to say that, nothing will happen, but that would be just watch the clock, right? It's at 2. You can't miss it. I say it all the time. Watch for a new hour. It wouldn't hurt to be prepared for a little bit of shenanigans there in the later part of the day. As you can see, we've got Fed speakers all day long today. And really, what do they have left to say that they haven't said? They've been pounding the table, singing it in tandem in chorus that they're going to hold rates here with no interest in cutting anytime soon. I know one of the Fed speakers yesterday has been talking about one cut but he's been talking about one cut all year for months. And the economic projections that we have now aren't much different than the same economic projections we had when he first started chipping teeth about one rate cut months ago. So, it still really feels like the Fed is going to take advantage of the situation, and they're not going to cut unless they have to. And that would be when they come in to play save a hoe. Now, yesterday, the numbers were up on job numbers just a little bit on the unemployment side. And they had a really good response to that, too. They were like, well, the schools were out for a brief period of time. And if the schools are out more than X amount of days, then all the bus drivers, janitors, anybody like that who gets that 10-day window off for 12 days, that's just enough time for them to file a week of unemployment. And that bumps the numbers up just a little bit. And the expectation is that those same people won't continue that claim the next week because they'll be back at work again. Factories do that here in Kansas. They'll go on layoff mode for 1 or 2 weeks. They'll do a big plant-wide shutdown for routine yearly maintenance and that sort of stuff. And the people who work the line in those factories, they'll claim unemployment for a week or two. It makes perfect sense. And it wasn't even that big of an unemployment shift anyways from the projection to the actual forecast. But people seen unemployment numbers tick up just a little bit. Bad news is good. Oh, it'll help the Fed cut sooner, and pop, there we went. It's all sentiment. Irrational sentiment, but nobody ever promised that the markets were rational. There was talk about some targeted sanctions against China too. So careful on that, with them being up the most this morning too. We're going to get Walmart and Target and Baba, NVIDIA. Those are all on deck. We can see here with finance juice. I don't get anything out of these places that I use here. I'm not promoting them, trying to benefit myself, right? I use these products. I have a subscription to Finance Juice, but you don't need a subscription. You can just use the free version. This thing has everything that you need during the day to keep track of what's going on in the news. Now, there's some paid services that you could get that would do better than this. If you wanted the top of the line, most expensive news service, the one that comes to mind is Hammerstone or Hammersmith. I think it's $250 or $300 a month. It's pricey. But most of us don't need that, right? That's like trying to swat a fly with a nuclear weapon. This place will give you just about everything you need, including order flow through Tick Strike. It's got built-in Squawk, so it'll read the news out to you. And on a pro account, you actually hear it 30 seconds to a minute before it posts in the text. And a lot of things that you hear on voice, they don't post in here at all. I didn't find it to be very onerous to get a subscription here, but even the free one, if you're day trading, probably want to keep your eye on this webpage. And as you can see here with the red and white writing, if they deem something to be market moving, they will highlight it, and that makes it really easy to see. So that even if you keep it in the background to where it's translucent. I have my translucent set pretty dark, but I could make it a lot lighter. I could still be able to see that bright red warning, and then their mobile's not too bad either. It seems like every hour on the hour today, we're going to be getting Fed speakers and somebody out there chipping teeth about something. The market seems like it's really enjoying this risk on sentiment, but it's just that warm, fuzzy feeling, and all of that can change. If we look at the weekly for a moment, here on the right-hand side, you can see that the discussion about a lower high was very timely because we didn't set one. And I kept arguing, don't count this as a lower high yet, because we need to fall away from it before we could say that it's a lower high. We didn't fall away from it. We instead continued to rally. And now we still don't have a lower high yet. It still could end up with something like this, where we just get near the high of the previous pivot. We could even match that high at the previous pivot and still fall down. So we're not out of the woods yet. But when this pullback began, I was talking about a 5 to 7% pullback as a way to kind of wash out, clean out trades, and get set up for a new quarter. And that was long before we'd even turned the corner and started heading back up again. I don't say that, to like pat my own back, is to point out the fact that there was nothing in the candles that told us any of that. It was just from studying, reading, looking back at what we've done before, measuring things, asking questions. The whole point of technical analysis is recognizing behavior in the market that is repeating again and again, trying to find the ones that repeat the most frequently, and then anticipating that behavior in the future. That's technical analysis. I bring that up because I see people that are still working on day trading, and they'll say things like, well, I've been day trading for a while now, and gosh, it's not getting any better. You could paper trade until your fingers fall off, but if the only thing you're doing is paper trading, you're not going to get any better at technical analysis of identifying where the market is going and anticipating market behavior. That's going to come from studying and reading and growing and learning. So we don't yet have an answer. We don't yet have a lower high. It's very likely we're going to end up with a lower high eventually, but we don't have it yet. 5,300 is on deck. If we can get through that, which is it's a pivot in its own right, liquidity resides on the other side of that pivot. And then we have this high up here, 53.35, 53.33. If we get to that, liquidity resides on the other side of the pivot. We would look for the price to get to the other side of that. Keep in mind, there's two things that can happen that would make sense rather than just hitting a line and falling back. One would be that they front run everything and we fall back without ever hitting the line, or two, that we overshoot the line and we get on the other side. When it comes to liquidity, those two make more sense than price moving exactly to the line and bouncing off of it. The CVI is pressing against the Bollinger Bands. It's already outside of all the major moving averages, and we're looking to see if we're going to begin stretching those bands out. You might notice a little bit of change on the chart this morning. This yellow box and the gray band around the weekly pivot. This is to highlight a little bit better where the pivot channels are at. I'll be sharing this code over the next few days. It just gives us a chance to put a cloud in place of those channel lines. You can see the lines are still there. the cloud just makes it a little bit easier to see. But when you got all this noise on the chart already, it can be a bit much. Gonna double check this number real quick, make sure the call wall is still 52.24. That is what it says, so that's not wrong. We're above the call wall now at this point. With my internet being out all night, I wasn't able to do the things I normally would, but there's more than one source for futures data. So let me check one more source here. See if that call wall got moved. $52.30 on the other place, and they've had 52.30 all this time, so that's not a surprise. The only thing that's a little different now is they used to have two. One was their 0-day call resistance, and the other one was just their call resistance, and they're both 52.30. So the market still needs to move that call wall, and the fact that they haven't yet is bearish. I mean, that's just a bearish sentiment, a bearish bias. Spot Gamma's founders wrote that they expected the market to stay sideways into Powell talking on Tuesday and then CPI on Wednesday of next week. And the market seems like it's trying to break out and run this. So it kind of makes sense with the call wall having not been moved, because the market is thinking we're going to go sideways. We're just going to keep that call wall in place. I looked around yesterday and I found some really big changes in SPY. June puts and May 20, May 21 calls. But I couldn't find, clear, definitive evidence that they were rolling out. So it's good to see that I couldn't find it, and here we see that it just didn't get done. So there is that, I suppose. This is one of the places that I was looking at yesterday. This 525, 518. Then looking at open interest percent change, we could see the June, but really this 520, 521. Change in open interest on that call right there. That really stood out. May 21, call side, 2,250%. This is percent change on open interest. But June 14, on the put side, 18,200% change in open interest. So I was looking around for it, wasn't really seeing a definitive change. And the good thing out of that, I suppose, is that not only could I not find it, they didn't do it. So I wasn't missing it. It just didn't get done. Now that we're above that call wall, we need to see how the market deals with it today, but it's very likely that they won't mess with it at all. And it can now act as support, oddly enough. Just remember, anything that was resistance, once you get on the other side of it, I mean, that's what happens. It becomes support. The channel for the pivot is relatively normal. The wider the channel, the more likely it is that we're going to go sideways and just chop about. It is an MDP right now. It's a missed daily pivot because we haven't hit it. This green line up here is a voodoo line. It's green. I believe they call it forest. We can see the difference between where this pivot is this morning and where yesterday's pivot was, which happened to be, a relatively narrow pivot channel, not as narrow as the day before, but you get these multiple narrow channels in a row, you have the opportunity for a big move. Yesterday wasn't a massive move, but it was a pretty good size move. It seems like we're continuing that this morning, even with this wider channel now. It is an outside channel, meaning the entire channel is completely outside the boundaries or the range of the previous day's channel. And the fact that we're opening up above the channel completely so far implies that we could continue to stay outside that channel. We have a market maker move this morning. No, the voodoo lines are weird. It's one of the reasons that I don't trust them is they're first they're hand drawn. Let me just first start with that. I have to go back to their website like every other month or so and download new ones because they're all put in there by the company. So it's not adding or subtracting or calculating anything that's on our broker's platform. Second of all, they have something to do with Elliott wave, and I'm not, a master Elliott wave by any stretch of the imagination. And third, there's some bits and pieces to it that they don't tell us, which is the key reason why I don't trust these things. I keep them on there because they are amazing, but not knowing what all the parts and pieces are and not being able to replicate them myself takes away a lot of the trust that I would give them. So I don't trade with them because I don't trust them, but I certainly keep my eye on them. And I can always point out how often price has responded to those levels. And different voodoo lines have different weights attached to them, just like a time-based chart, a weekly or a monthly line has more weight than a 2-minute line. You know what I mean? Like it's the same concept. So there's different levels of strength when it comes to these lines, but they're in no way connected to open interest or options or anything like that. Voodoo lines, if you want to learn more about them, they come from Simpler Trading, and they're not free. And I can't share them. It's one of the few indicators that I can't share because it's one of those paid for indicators. Thankfully, I didn't have to buy it. I don't buy indicators. We have a market maker move this morning, and we have a light volume. It doesn't seem light compared to the last few days. We saw 56 yesterday and 69 the day before, so 74 feels a little bit better, but it's still light. And the main thing when it comes to a market maker move is that it implies that they are hedging. This isn't my guess. I'm not assuming that they're hedging. I'm not giving you my opinion. They are hedging. Like the sun comes up and goes down. That's a fact. They're hedging. That's a fact. Hedging is cost. They would only do that if they're concerned, because they're not going to frivolously waste money on a hedge if they don't think it's warranted. So something's on the table today that is making them nervous and causing them to want to hedge today. I say it that way because it's not CPI next week that they're hedging. It's not Powell talking on Tuesday that they're hedging. It's something today that they're hedging. Well, what are they hedging? The only thing I could think of that would make them really nervous is this inflation preliminary, University of Michigan 5-year, 1-year. Anything that has anything to do with inflation. Now, if it gets unmoored from 3%, this market's going down. That's just all there is to it. But why would it, right? So this is the biggest thing on the table today. It is what they're hedging against, is to see some inflation numbers that really says that everything the Fed has been doing isn't working. That seems like a very low hurdle. And if we can step over that easily, then the market should continue to stay buoyed and we could get to 5,300 pretty easy today. We can see that 5,300 is the upper ADR line. So it's within our grasp, but anyways, the lower ADR, which we are closer to the red line top than we are the red line bottom, right? So we're closer to this one up here than we are down there. If it wasn't for any sort of econ, if we just ignored the fact that there's econ today, I would say since we're closer to the upper red line, we would go to that one first. But because of econ, we could go either way, right? It is possible that that the Rafa mess comes into play over the weekend, but I mean that's such it's so far out of our reach, right? It's just another brick in the wall of worry. The market maker move that we see here and the hedging that we see right here is not for the geopolitical risk from the Middle East. After 9 o'clock or after that data comes out, we should start to see this fade. Right now it's at 28. I wouldn't be surprised if it continues to climb during the stream. And by the time I end, maybe it's sitting in the 30s. We'll want to see it start to decline after, at least after the market opens, that we see it start fading back towards 15, maybe 10, and then it just disappears, right? It'll just fade out. If it continues to increase throughout the day, then I'm wrong. Then it absolutely has something to do with the risk over the weekend. And it's reflecting that they're concerned about the moves that we could see before the market opens Sunday night. So there you go. By saying it that way, it gives you something to look for to validate whether or not it could be connected to any sort of political ramifications from Rafa and what could happen in the Middle East. For those of you who do not have Thinkorswim and you don't have that label, you can just use the options expiry. That's where the data is coming from anyways. A market maker move was something thought up by the creators of Thinkorswim, Don and Tom and all those guys. If the front series is higher than the next series out, you get a market maker move. So no matter what trading platform you're on, as long as it has options with the implied volatility average on the side, then you can check to see if you've got a market maker move or not. What you're going to want to see after 9:30 is that this top number, the front options number, today's options, you're going to want to see that number fade, go down faster than the next series out. and get below it. Once it gets below it, we no longer have a market maker move, and it'll disappear. We had a nice little pause here. And now we've come out of it. We have the opportunity to really expand at this point. We're on a daily time frame here. 52.64 is the next level we have to be concerned about. And then beyond that, 52.83 and then 53.02. The market is back above all of its moving averages. 3, 10, 20, 50, 200, we're back above all of them. So it's looking really good for the idea that we're working our way back up to the top. Just keep in mind the conversation that we had earlier. Until we get through this top and prove that we're going to keep it, then there's still the threat, right? And we can back up even to an example from back here where we had set a top and then we struggled to get through that top. Then we finally broke through it, really started to expand higher. And then we got QRA, and that was the end of that. We cut back down through everything and dumped. Always want to know where that QRA is at, right? We won't have another one now until August, so that's out of the way. So today we are inside day breakout. The RTH has a more solid range than the entire day of yesterday. You can still use both. If you want to mark out, say, yesterday's high to yesterday's low in the RTH only, projecting that up. You can also just capture your IB. It's your 1 hour initial balance, or the Globex high to the Globex low before the pop came. You can see how the VWAP is keeping up with us. We got a little overextended this morning on it, but we're already coming back to it. This offers us an opportunity for like a zipper or reciprocation. Take the move from its highest point to the crossover. And then just set it to the downside. And you got a projection of where the low would be. And imagine that it's the low of the Globex. So if we do cross through the VWAP, it owes us reciprocation. It owes us the same thing on the other side. That would put us right back down to Globex low. It's amazing how often the stuff that we measure just lines up with other stuff and confirms our bias. I don't know that we're going to get a zipper here that will get a reciprocation to the other side, but if we break VWAP, that's what I'm going to be focused on. Of course, that would put us back down through this voodoo line, and I don't think we're going to get back down through it very easy. We had a hard time getting above it. It was a very strong resistance. Remember, the words support and resistance, they are past tense phrases. If you don't remember being in school and studying that concept, it means it's happened behind, it's in the past. It's not something that we anticipate. We don't anticipate support and resistance. We can point out where there is potential support and resistance, but until it actually does get supported or resisted, it's only that, it's potential. Well, this has proven that it was a resistance. It did resist us. So now we have potential support there. This 52.49 is one of the options levels. It's an area of interest from spot gamma. It makes sense because it's a round number. It's like it's 52.50 basically, right? If 52.50 is the level we would want, liquidity resides on the other side and or front running it. So 52.51, 52.49, either side of the 52.50 level, it would make sense to find some sort of options structure there. So that's where that red line comes from. That's two levels of potential support underneath us. It's not to say that we can't get down there, especially when we've got inflation expectations on the table. But other than the inflation expectations, there's no reason to believe that that won't hold. If we break it, though, then we'll target the daily pivot, 52.26, and the call wall. They're very close together, so we would just take them both as a group, get through those, and we'll target the lower ADR, and then we'll target the 3-week moving average. The market maker move has not increased yet from when I started streaming. This is just a nasty mess. There's no pattern here, which used to bother me. You know, when I did all the work studying and learning about volume profiles and TPO profiles and the different letters and what they represent, what they mean. And I'd get to the chart and I would try really hard to try to see something here. But you want to just acknowledge when there's nothing here and don't even stress on it. It's not your fault there's nothing here. So could it possibly be a capital B? Yeah, it could. You know, if we were to work really hard at it, we could say that maybe that is a capital B, but it is trash. You're better off just saying there's nothing here. Like we talked about yesterday, the volume that we see here at 52.17, this volume shelf won't become point of control until likely Monday, maybe through the day today, as we lose these candles here on the left, that we'll lose enough of this volume and we'll see the point of control move today. Maybe. That is a cog line, by the way, 52.11. It would help also if we do go down to 52.11 today. That would help bring that pivot point or that point of control up. In fact, I'd almost guarantee it by that point, we'd have it there by the end of the day. Either way, by Monday when we come in, that will be the new point of control, 52.11. We have a VPOC from yesterday. $52.31 is a cog line. So that's really close to a cog line. When it's that close, we just go ahead and put it on it, right? Just go ahead and consider that it is on the cog line. And we don't have any profile here worth mentioning either. It is scattered and disjointed. There's no unity to it that would form a pattern of any sort of confluence. $52.97 has a VPOC, which is over our head. So if we do make that run towards 53 today, just kind of keep that number in mind. It's so close anyways to the round number 5,300 that it makes sense as a part of the front run. Remember, there's two choices. Round number is a pivot. They'll either front run the pivot and we'll turn away without hitting it, or they'll be on the other side of the pivot and we'll punch through it to get to the liquidity that's on the other side. Speaking of on the other side, we are outside of the weekly expected move. We can already see next week's box, but it's not set in stone yet. It's going to move with us through the day today as price moves up and down. That gray line, which is the current price, will also move up and down. But at 4:15 tonight, it'll lock it in place and then it won't move again. We still get that sneak peek though. We can see, what are they looking for next week? Are they increasing our volatility? Are they decreasing it? So we draw a box on our current week and then we just drag that over and set it on next week's. Notice that I'm not typing in the numbers and getting it just perfectly exactly centered on our current week and then bringing it over to the next week. You could, there's nothing wrong with being anal retentive, but this is just a snapshot in time. It's not set in stone. There's no reason for us to, get out the scientific calculators and really squirrel down on this thing. Eyeball it. It really looks like there's no difference between next week's range at this point and our current week's range, which is a little odd because we have PAL next week and we have CPI next week. And CPI is kind of a pretty big deal. I mean, PAL's a big deal too, but not always, right? Because if it's just some Scouts of America lunch or something, then with no QRA, not really, going to move the needle. So it's interesting that the volatility isn't being projected in there yet. Very likely because just like FOMC, CPI can be volatility suppressing. We expect a range before CPI. A lack of movement means a lack of volatility. We're now 2% above the 10-week. And even though we're outside the weekly expected move, and yesterday kind of felt like a pretty good size move, the question remains, did we move too far, too fast? Are we overextended, overbought? Does it owe us a pullback? Nope. No, it doesn't. We can see that here. I mean, it looks like we really made a big move, and it looks like we're really extended. And there's the 10, right? So put it on a weekly. We're not overextended from the 10. We can see how we were a lot farther away from that 10 than we are now. This is nothing. 2%. We've been to 4% and 5%, 5.25%. This is nothing. Even on the year, what we've done for all of 2024, we spent most of it above this level. So we're not overbought. It doesn't owe us a pullback, at least not on that time frame. Taking a look at the 10-day, on the other hand, we are right into that area where we expect the market to pause. This is showing mostly just this year. January 3rd, start of the year. We can see the white candle there. It's the start. And all this year, we've mostly stayed within that 1.5% to the upside. 1.5% above the 10-day. Now, we've been higher than that before if we zoom out. We've got plenty of records showing we've been higher than that. But when you have a good, clean, solid trend, like we've had in the past, you tend to have a good, clean relationship with that 10 and just holding somewhere around that 1.5 range. And there's been periods of time, right, where we just do a really good job of that. It's the extremes that really start to shake things up, right? And notice these really tall spikes above the 10, those were in bear market conditions, when we would violently spike above the 10 and rip really high before flipping over and dumping back down again. So we don't want to see that kind of violence, right? Nice and clean, consistent price moves. So we're going to expect that pause into next week, very likely matching with the pause for CPI and waiting on Powell. It all makes perfect sense. We're far enough away from the 10 that it owes us a pause. And we've got Powell and we got CPI, which the market is telling us we're going to pause. We have a lack of volatility, or the range would have been bigger up here, which also suggests a pause. And I'd like to monetize that, and do some kind of double calendar or iron condor maybe. The problem with that is because we could use Wednesday, right? We could use a Wednesday expiration for that. You wouldn't even need the whole week. The problem is Powell on Tuesday. If it was just CPI on Wednesday, then heck yeah, I totally want to do some kind of ranged play. But with Powell on Tuesday, then you'd have to have one for Tuesday and then one for Wednesday. And it just doesn't time well. So for 0-day plays, those will work good, but for like a 2-day swing, 3-day swing, I don't like it. They just don't line up. Nat gas is down the most. There's really nothing else down besides nat gas. On the things that are up, what's that? Semiconductors, China, gold miners, precious metals, Bitcoin, biotech. I mean, semiconductors again, uranium, the FANGs or the Mag 7. The VIX is up, oddly enough. China, again, metals and mining, tech, building materials. So you can see the fangs better this way when we use the heat map. The big boxes are the Mag 7 or the fangs. Microsoft, not even at a 0.5%. Apple, flat. Amazon, pretty much flat. Meta is up 0.5%, and Google's down 0.75%. So a little bit of disconnect there. Tesla's kind of doing its own thing, up more than a half. We want to see things get cleaned up, right? It's little organization to everything. All right, so we can look at equities on what's up this morning. Google being down is by itself. All the other fangs are either flat or up. Netflix is really up compared to where it closed. All right, well, Netflix is the biggest changer, red to green. It resolved its earnings mess and still looks good. If it was just going to come back up here to dump, which makes sense, right? We'd call that like a gap close and then giving everybody a chance to change their mind from earnings. So that we got back up there. But if it was going to dump, it would have. And it was touch and go a little bit. We got there on the 8th and sold out of it. Tried it again on the 9th and sold out of it. And now we've jumped over it completely. And I've mentioned this before because it was something taught to me when I was new that if a market can't get through a level in the intraday, in the daylight, it'll jump over that level in the after hours or in the pre-market. It'll do it in the dark. And when I first learned that, I thought, that's silly. Where do you even come up with that stuff? But you continue to see it, if you're looking for it, if you think about it, it's right there, right in our face. So proven yet again, if resistance stops a market on the intraday, you'll very likely see it jump it. If it tries it more than once and can't get through, it'll jump it after hours. And if it hadn't jumped it, it would have dumped, right? It was like a one or the other. It wasn't going to stay there. So now that we're above that level, we have an anticipation of support at that level. And now the next one to deal with is the highs. This gap, we would expect now to keep it. I don't know if we're going to open at 621 because we still have data coming, but that would be the expectation now that we keep this new gap. And that if we do fade this morning, we don't want to go lower than yesterday's open. $614.40. Baba's up a little bit, but that seems pretty nasty. Like it's maybe going to give some of that back. Baidu is not up. Same with JD. Same with PDD. Well, we can see that China's up, but we're not seeing anything reflected in here. FXI, that looks great. But those China ADRs that we would normally look at, they're not. Like, where's the wow? And it's not just FXI. We can see emerging markets is also up. EEM, it's another reflection of China. It could be some of these others. We can see there's, a number of names here that are up 7%, 5%. These are also China ADRs. They're just smaller names, but whatever it is, something got China all lit up, and it's not reflected in those ADRs that we would normally look at. JD, PDD, Baba, Baidu, XPEV, Neo, not seeing it. We're losing semiconductors. We continue to see that fade off. Airlines, they're up, but it's dumping down. We can see a print way down here now at 2048. So I'm sure this is going to change to reflect that soon. Silver looks like it's struggling to keep that gap up. Gold, precious metal, all of this stuff is starting to turn around. I would say let the data come out and then run the check again, see what was able to maintain after this inflation expectation data, and take it from there. Everybody, be careful, be safe, have a good weekend. I will see you all next week.